Welcome to another episode of Let's Talk Crypto, the live stream where we talk about crypto news and price action. My name is Mike. All right, guys, we see the market, kind of going sideways in the last little while. Guys, this is the weekly. You can see ultimately Bitcoin, Ethereum, slightly down, but, pretty much sideways for about a week. We have some good gainers throughout the week. The last 7 days, we saw Caspa do very well. Maker, Chainlink doing pretty good. Floki, okay, not too bad. Bonk, Sol, of course, Sol up approximately 12% for the week. However, there are some dips like Jasmine, Say, FET coming down to a little bit lower levels, but of course they're emerging, so keep that in mind. FET, AGIX, and Ocean all getting together into one project, so be aware of that. But ultimately, the market, guys, when we go sideways, there are opportunities as well, especially within the weekly. There are intraday trades that we can definitely take advantage of, but we need to stay one step ahead of the market, guys. Here on the channel, we don't mind up, down, bearish, or bullish. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including these live streams, not so live streams, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover here on the channel or even on the live streams, feel free to let me know in the comment section below or on the chat, and of course I'll definitely put them in top priority. Guys, if you want to join the Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, so usually I'm live at 7:30 Eastern, of course, and as you guys know, I am traveling. I'm going to be traveling for the next month, a month and a half at most, I think. Usually that's when I start getting back to the main studio. However, BTDcrypto is going to continue as usual, all business as usual. There will be a few, alterations, like a few pre-recorded live streams that I am definitely going to be posting, advanced. So that way we can keep up with what's going on. And the best part is it allows me to actually look into some, projects. It allows me to look into some of the narratives. And this is what I want to do today, obviously, is, look into some of the major narratives within the crypto space. So when I do release a pre-record, that is going to be on the agenda. The first narrative that I want to focus on today is the gaming narrative. The question is, what is happening with the gaming narrative? Of course, there are many narratives, and they have been growing in the last little while, guys. I remember when I started in the crypto space, and if you looked at CoinGecko a while back, there was only a few little categories to worry about. In fact, this category tab didn't even exist. Now all of a sudden we got tons and tons of categories, because the crypto space is growing. We've seen lots of growth, lots of diversification, lots of solutions to problems, right? When we talk about software solutions, the most important thing that you should be asking yourself is, what kind of solution is this software solving? Now, of course, a lot of the problems that the Web 2 does offer, we turn to Web 3 for those solutions, and Web 3 has a lot to do with the integration of blockchain technology. And of course, stemming from the blockchain, we do have the layer 1s and all the applications that are built on the layer 1s. So what we have to understand is, right now, we have to be hunting for opportunities. I think as we lead into the summer, we could definitely get some sideways price action. We could definitely get some opportunities to be buying dips at lower levels. And the best way to prepare for those scenarios, and especially with conviction and accumulation during conviction, is to get fundamentally bullish. Learn about crypto space in general, learn about some of the projects, find some setups, and so on. So this is what we're going to be doing. We're going to be going through the narratives. And of course, today, as I mentioned, I want to talk about the gaming narrative. So what I do is, if you go to categories here on CoinGecko, you get all your categories. As you can see, there's a lot of them. How many do we have all of a sudden? If we keep on going down, you can see that there are quite a few. Okay, so what I would do is, if you're looking for a particular narrative, I would organize them alphabetically. It's just going to make your life easier. And as we go down, you can see we got a few here, and obviously narratives also relate to the blockchain themselves. For example, the Binance blockchain, the Base blockchain, you got Base memes, you got so many things, DPIN, and so on. But if you keep on going down, we'll go down to the gaming section. Now, one thing that I noticed here in the last little while, they definitely split up the gaming narrative. Before, it was just gaming, GameFi, that was it. Now all of a sudden you have gaming, GameFi, gaming blockchains, gaming governance tokens, gaming platforms, gaming utility tokens, and you can see that this is starting to get a little hectic, right? Because really what I want to know is, what are the major players in the gaming narrative? However, now there's subcategories of the gaming narrative, as you can see. So the question is, what do we focus on? Now, of course, when you diversify your portfolio, you get into various narratives, and since there are so many of them, you have to make some critical decisions. But now also you have to make some critical decisions as to which subcategories you want to support within each main category. This is where things get complicated. Personally speaking, for me, I wouldn't be getting to that much detail. I would be looking at the overall gaming narrative and looking at projects that, because a lot of them, especially when it comes to, let's say, governance, right? Gaming governance token. A lot of the times, some of the blockchain tokens or coins also belong within the gaming governance token or narrative, right? In the GameFi, the same thing. They kind of, some of them kind of overlap and they play within the same narrative. So I think it's a little bit overkill personally to split them up, but we'll do our best, right? Ultimately, if you get into some of these categories, you'll see. Let's get into GameFi, and you can see. If we click it, we should get some, the overall market cap of that narrative. Obviously, you can see here we're at about $17 billion, which is pretty big, considering gaming. We have a little bit of trading volume kind of going sideways, so that's interesting. Now, if you start looking down, they are organized by a market cap, and you can see the largest market cap currently is Immutable X. Now, Floki is also another one. We have to understand that Floki just started dabbling into gaming, I think, within this bull rally, this cycle, pretty much, and they came up with a game. I forget what it's called, but I think it's something to do with Valhalla or something like that, which is pretty cool ultimately. But really, it started off as a meme coin. So this is why it's a little bit important to understand that some of these projects kind of overlap within different narratives, and some of them are stronger in one narrative than the other. And Floki, in my opinion, yes, it is a traditional quote unquote traditional meme coin, but a lot of these meme coins from that era, from the previous bull run era, are now employing or integrating some true fundamentals, like maybe gaming, like in this case Floki, which is not bad. And we've seen Floki do very well in the last little while, considering. So if we keep on going down, we have Altcoin. How is that involved in gaming? I know that definitely belongs to the Telegram ecosystem, but I'm not sure what's going on there. Gala Games, we know it's an OG in the space, and Beam and many others. We have Axie Infinity, another one. Is the sandbox gaming? It could be. I know that it is part of the metaverse, right? It was a big part of the metaverse, but there's gamification within that metaverse, which, okay, makes it part of the gaming narrative, but also part of the metaverse. And obviously we know, if you've been lingering here in the crypto space, the metaverse narrative is not the strongest. So if you kind of dabble into both ideas here, what do you think is, where are people in the people's mindset? Where does sandbox land, right? At the end of the day, I see it as a metaverse play, not so much a gaming project, but to each their own. Ronin, an interesting one, of course. Ronin is an interesting one. Why? Because it is a gaming blockchain, a blockchain that dedicates itself to gaming. And this is an interesting one because it is new. It's fresh. The idea is fresh, and ultimately it could have some good potential. It's a $682 million market cap. It's not small. It's not a micro cap, but it's not large, and it has good potential for a nice continuation up and some good growth in the immediate short term. And the list goes on. Illuvium, Prime, and keeps on going, guys. There's a lot here. I can be talking here all day long on all of these projects, right? New ones like XAI. We have, what else do we have? Nakamoto Games. We'll be covering Nakamoto Games in a bit. Myria is another one that we got to talk about because it's been doing very well, and people are talking about. Heroes of Mavia is another one. Of course, guys, if you want me to cover any of these projects in future videos, feel free to let me know in the chat or in the comment section below, and I'll definitely put them in priority because really there are so many projects, Shrapnel, and the list goes on. Now, if we went back to the narratives, you can see again, we're going to have to go back into alphabetical because for some reason CoinGecko resets that. So let's do that. And then we'll go back into the gaming. Sorry for going up and down here. I know it might just make it dizzy, but we'll get through it. And you can see the gaming blockchains. So we did this one. Now, if we went to the gaming blockchains, all right, we'll see that you'll see Ronin here again, right? And IMX is here, and Oasis we saw already, and you get the point. And this is a very small narrative, and you can see the market cap is small, right? It's not a huge market cap, right? So ultimately, we have to understand that this narrative, or this subcategory of the gaming narrative is very small. So gaming, blockchains, and Beam is right up here, and we have Ronin at a smaller market cap, and IMX obviously at a larger market cap. So what we want to try to do is also diversify our portfolio within narratives based on market cap. That's another good strategy here. Why? Because ultimately, you want to be able to lock in some potential speculative growth. And the only way you really do that is get into a project when it's young and undervalued, right? You don't want to get into something or bet the farm into something that's already somewhat matured. Now, IMX is not a large market cap. It's not a blue chip of any sort or anything like that, right? We're not talking about massive market caps, but still, look at a Ronin, for example, or even for example, Beam is still pretty good. Like, even if it were to catch up to IMX, and if we get that bull run and the gaming narrative starts to wake up again, Beam could easily double just to catch up to IMX, or even triple if you think about it, right? So there's growth, there's potential if you get into smaller market cap projects. So nonetheless, it is a decent one. All right, so let's go back again. We'll look at some of these other narratives, and then we'll jump right into some charts to see, which projects are interesting. And of course, some of the OGs, we'll look at some of the OGs. We'll look at some of them that have been coming down significantly and bleeding out. We'll look at some of them that haven't been showing a lot of strength. And this is the way we can diversify. Okay, so we're going to keep on trying our best here. Blockchain, we talked about governance token, and so on. You know what I'll do is I'll open this up in a new tab. I'll open this up in a new tab. This is probably a lot more efficient. Look at all this gaming utility token and so on. So governance, you can see we have Axie Infinity. Illuvium is here again. Wilder World, if you're interested in that one. Gaming is all over the place. Planet X, Shrapnel's here again. So we've got a lot of duplication, as you can see. So this is actually healthy, because then when you see a token being duplicated across various narratives, what that tells you is that the utility behind the token is wide. That token can be used for many things, or a coin for that matter can be doing many different things within that blockchain, right? So that's not bad of a scenario. If there's good utility, that means there's good value propositions for the future as well. So we're looking at a lot of opportunities here. Yes, some good stuff. So we see a shrapnel everywhere, almost on each narrative so far, I think. Star Atlas, I'm not really that interested. It's a DAO right here. This is a DAO token. Chain, Karat, I'm not sure what that is. Magic, it's been around for a while, bleeding out a little bit here. ApeCoin, I'm not really crazy about it, given that, it relates to that NFT meme-ish kind of culture. Although I'm, all up for it. I don't know. I don't see the hype behind ApeCoin, to be honest. So you got to make your choices, guys. You can't be bullish on everything. You can't be buying it all. You got to make choices, and sometimes your choices have to exclude some projects, some narratives, and so on. So make sure you're critical about what you choose to put on your portfolio list. Okay, so that's that. And then we got gaming. Gaming platform coins, a top gaming platform. What do you mean by platform? I feel like this is more or less when they refer to studios. Okay, where we're talking about a gaming studio. Gala being the OG of gaming studios here in the crypto space. It took a bit of a beating in the last little while. I feel like even after the beating, it did get that relief, and it's still coming down to slightly lower levels to perform a bit of a confirmation. We have Vulcan Forge, PYR, a lot of people talking about that one. It's been OG. You can see the structure is looking pretty good within a nice channel. Nakamoto Games is another one that ran up significantly from the last summer, where we start to see Nakamoto's just kind of tear it up, and all of a sudden Nakamoto's pretty up there right now. Market cap, it's only at about a $81 million market cap, guys. It's still a small market cap. It could still grind way higher here, guys. So we have to understand that, yes, a lot of people got in early, such as myself and many others that have been following me here on the channel, but ultimately we have to see Nakamoto. It has a lot of signs of strength here, and for potentially, making it for this bull run and making it one of the larger caps for the bull run. The same with Miria, $75 million market cap we're talking about here, guys. And there's so many more. Altura is another one, $20 million market cap, micro cap for sure. I feel like we need to be talking about this one. Of course, I'm going to put that one on the list. Altura just for looking at TA. And you can see Neox is another one that had a great value proposition recession. It got, totally beat down in the last little while. GameSwift is continuing to take a beating. We're going to talk about all of this. All right, guys, you know what? Let's get right into charts. Of course, the narratives are all there. We have Prime and so many other shrapnels everywhere, and getting a nice bounce to the upside as we speak. So let's take a look at some of the price action. Honestly, of course, we look at Bitcoin all the time. We take a look at Bitcoin. Bitcoin has been in a nice structure. It's kind of boring. We got to take opportunities, right? We got to look for those opportunities, and of course, we're looking at the gaming opportunities. Let's begin by looking at a couple of them. Let's look at Nakamoto Games. For me, it's an OG. Why? Because it's one of my major investments that have done very well for me. And pretty much that's where I started the previous last summer. The beginning of the cycle was with Nakamoto Games, and all of a sudden Nakamoto Games is showing a bit of weakness by making a lower low. So we got to be very clear about what's happening here with the price action. You can see that ultimately there are people that bought here at the bottom, and that was me, right? Buying here at the bottom, below, way below, a dollar, of course, below 10 cents, all the way down here. This is where I was calling bottoms on Nakamoto. Now, what you have to do is get into the mindset. People down here, yes, some of them took profit, some of them may have not, some of them have a long-term vision, some of them are just here for a quick move and be able to, scale out and take profit. The reality is Nakamoto has been grinding to the upside, leaving all these individuals very, very profitable. Now, at signs of weakness, you're going to see that people will take profits, but the question is, does it come down to hunt liquidity down at these levels? Now, we've seen the chart retrace significantly with this lower low. However, we did not get a lower high. So it is likely that we do get a bullish response. The bullish response could take Nakamoto back to about the $2 range. If we get rejected here, it's not a good look, right? We want to basically conclude that this dip or this retracement is over. Now, what I fear is this. I'll be honest. My biggest fear for the Nakamoto chart is the big picture chart. Now, do we get a structure right into here? Okay, that's bigger than this structure because there's a bit of a structure. Now, what I want to do is spread this out so you can see what I'm talking about with a bit of detail here. And you can see that there's a bit of a sideways structure right into there that suggests that we already are making an ABC type of correction. But what about if it's not? What about if the reality is we go for another leg down after another structure right into here and we come down to this level to hunt this liquidity at this zone? That's my issue here. Is that right at these levels right here, no one really got hurt. There's no damage done, really. There's very low volume, not a lot of market participation. However, it could be that we get that bounce. We can see that we did retrace a little bit here. Let me get rid of some of this artwork. And then we can look at the retracement. The fact is that we came down for an extension and we hit the 1.27. That's my concern. Swing low to swing high. And you can see that we didn't even get down to the 1.27 extension. The 1.27 extension is all the way down here. Look at the confluence, guys, to basically come down to this level and get to the 1.27. The 1.618 is all the way down here to hunt liquidity to where the majority of the individuals got into long positions, and it could happen. So I have to keep that mindset. Okay, you have to keep that in mind, that it is possible that the market does that. But is that going to happen in one go? I think that it's unlikely. I think it's likely that we do see Nakamoto get a bullish response, and that would be a good opportunity to de-risk. Let's look at momentum and trend here for a second. We can see that the momentum is, did get oversold. It did get oversold with the last impulsive move down with this double bottom and this little structure that we've built at the bottom of the volume gap. You can see that the bulls did respond. In fact, we got a class B bullish divergence right into here. I would say it's a maybe not, right? Because we kind of went higher highs on the price action, and we did get higher lows on the price action, also higher lows on the momentum. And there's no real bullish divergence right here. So unfortunate. I thought it was. When I zoomed in, it kind of said otherwise. Now we do see that the response here on the daily got bullish in the sense that it's overbought and the expansion is going to the upside and getting very, very tapered in to suggest that maybe we get a bullish response, maybe we get a green expansion. But look at the last times we got a bearish expansion, we did not get any bullish response, unfortunately. Now, is this time going to be different? Do we eventually it's going to happen, guys. We can't always get bearish responses forever. That's not the way it works, right? We need to see bullish and bearish responses. It just so happened that in the last little while, the bears bears have been in control. But after 3 expansions to the downside, eventually we do have to expect that the bulls are going to come into play. And the reality is, when is the best time? Usually when we see oversold conditions on the oscillators, particularly in this case momentum. So we are in a good spot. What I want to see is this. What I want to see is here on the daily, what kind of response we get from the bears. Do the bears get a bearish response and get down to lower levels? And do we make a lower low on the bearish response? If the bearish response, meaning the volatility, the orange line, comes down here to oversold conditions and does not make a lower low on the price action, it gives us an indication that the next move for the bulls means that we're going to go for another higher high, because we did make a higher high right into this little move to the upside right here. So it's a good indication that Nakamoto's could be looking for its bottom at this level. Now, of course, I always have that mindset, like I mentioned. We always have to be prepared that what about if we come down and we break this low? Guys, if we break these lows, especially after a bit of a structure, guys, it's very likely that we come down. Like I mentioned before, we come down to the 1.27 extension at about 53 cents, which would be a super dip, super opportunity, especially if we get structure here. Again, looking for that sideways price action, inverse head and shoulders, cup and handles, Adam and Eve's. That will get me bullish. But you cannot negate the fact that the current moment we are getting an EMA cross to the upside with green histogram bars, and the expansion is completely tapered off here for the trend. The trend is looking like it wants to potentially get into the bullish control zone, which is the top half of the oscillator. So Nakamoto has some good indications that the market is oversold. You know, it's looking for a bottom. It has reached its bottom. Remember, volume gap, fell through the volume gap, touched it 3 times, and then got its bounce. Do we continue respecting the bottom of this volume gap, or eventually do we come down to much lower levels at 1.27 extension, about 50 cents? Guys, this is easy. If we break below this structure right here, stop yourself out. We're coming down. If we continue staying above the horizontal support, I'm going to make this a bit thicker and so that we can, you know, basically highlight its importance. If we stay above $1, guys, it's looking good for Nakamoto. If we break below $1, guys, we're coming down to about 50 cents, and that's a 50% dip, and that gives you the opportunity to accumulate 50% more tokens. So not a bad idea. So not bad overall. Nakamoto's bullish still. If you think about it, what has been happening in the last little while, let's kind of zoom out. It has been holding up pretty good, especially right into this level as the market has been dipping. Nakamoto, you know, did dip, but nothing crazy. Didn't really come down to bear market bottoms. Consider that a lot of these altcoins that we've been looking at here in the last couple of weeks are already back to bear market bottoms. Nakamoto is nowhere near the bear market bottom. Okay, so let's consider that we need to see some structure to change the character. We need a higher high, which we got one already. We need to come down to make a higher low, which we already got. So it looks like a trend reversal, but we need to break above this to really consider this a major pivot point. A major pivot point would suggest above $1.67, change a character of the structure, and we're moving to the upside. All right, guys, let's move on. Let's take a look at Gala, another OG in the space. By the way, Nakamoto Games. Let's take a look at Nakamoto as far as its market cap, because I don't remember. I think it's an $80 million market cap. Nakamoto. Let's see. Nakamoto is market cap, trading volume. Market cap is 0. No, this is weird. Oh, market cap, yes. About $81 million market cap. It's still baby still, guys. There's a lot of potential still there from Nakamoto Games, and it's super bullish, and I think it should do very, very well. Now, if we look at Gala, for example, much different story. The metrics are a bit different. We're looking at almost a $1 billion market cap, right? It's a $991 million market cap and change. And we have to understand that this thing has been around for a good while, and it got its layer of FUD that it, you know, basically was able to, you know, weathered the storm. You know, there was internal issues with some of the team members, you know, lawsuits started coming out and the price started tanking. Let's take a look at it. Let's take a look at the price. Let's see what's going on with Gala Games. It's a studio. I know I have a chart that I've already used, so I would like to use that one because it kind of keeps our strategy very accountable to see what we're kind of dealing with. We're falling through volume gaps. We already saw that we hit the top of this volume gap, and you know the whole accumulation range right now is completely being utilized in the sense that the price is coming back right in it. You can see the overall volume right into here, all this market participation. The price is right back in accumulation range. Now the good thing is that as of yet we did not make a lower low. Okay, so it's not bad. Let me just highlight the importance of what's really happening here. I know I have a few trend lines right into here. Let's hopefully this not too messy, but we can see that we got something going on in here. We broke this bottom and the bit of a trend. I would say that now it's very viable to say this. We only got 2 touches, and we can't even confirm that this is a touch, to be honest, because it could keep on falling below the point of control. And you can see the point of control, that red line is right there trying to act as support. We got a fat accumulation range right into here, a node of volume that could act as support. Like, it could be, right? It could be that it acts as support. The retracement is definitely nice and deep. If we fall through this volume gap, we're coming down to the bottom again, which is at about, 1.2 cents, 1.3 cents, which would be super, super bearish. So what we really want to understand is that this is our invalidation. This is where we say no more. We're not buying anymore. This is where if we break below here and we start breaking below, you know what, let's make this a little bit accurate and make it absolute. If you think about it, if we break below this previous low, guys, we're done. There's nothing else here for Gala Games, and I wouldn't be buying anymore. However, as we come down here, the risk to reward ratio improves and it gets better, and we have to have, some conviction. And the fact is that if we keep on making higher lows, that means that there are individuals that are not selling, because the sell pressure is not enough to cause some of these individuals here at the bottom to capitulate, right? They're just holding, but you have to understand that the market participation down here is a lot less than it is at the current level. So we are hoping and keeping an eye on this chart that these individuals are the last line of defense to hold the price bullish, because if it breaks down, it comes back to the bottom, guys. That's it. Risk to reward ratio, you get in and you get out. That's pretty much it. So what I'm trying to say is, let's say if we get into a long position, hypothetically right here, okay, for now we'll keep it like that, and then we'll hypothetically say, stop loss right underneath this yellow thick line, because if it breaks below there, invalidation. And then we start looking like, okay, what about if we go back just to range highs? Let's be modest, right into here. Risk to reward right now is 2 to 1. Okay, that's not the greatest, but what you have to understand is that this current setup is basically trading the range, trading all of this volume in and out like everybody else is, right? What about if we break out? What about finally we came down to this level to pick up bullish bids, to pick up enough bulls to buy the dip because they're bullish fundamentally and long term, that eventually we break out of this range? That's where the magic happens, guys. So let's continue. If we continue coming down and the price comes down for a further dip, we have to understand that DCAing will improve your entry and it will ultimately improve your risk to reward. So closer to invalidation you can accumulate, the better it is here. Okay, because your ultimate invalidation is, of course, that thick yellow line. So if we can kind of scale in, that's one way you can improve your entry and improve your trade setup, is getting in as close as possible and DCAing and dragging your average cost down as it comes down. But then also, let's say hypothetically, again, we right at this level, we get in. What about if once the price, let's say eventually we get that bottom, we come down and it doesn't stop us out, we continue moving to the upside and we start coming to higher levels. Now we have to understand that right now our risk to reward ratio includes a 66% loss, guys. So if we break below, we keep on falling, you have to be able to endure a 66% loss, which is a massive one. This is why with this current setup that you see right here, you have to enter with a position size that respects the 66% loss. So it's got to be small enough that that 66% represents only 2% of your trading portfolio. So that way you're not taking a big hit for your trading portfolio. You have enough capital to play again when you find other opportunities in the market. So ultimately what I'm saying is, if you can drag your average cost down, great. And if you can't, position size is the way you're going to control your risk. Now ultimately, if we do get the bounce and we get up to these levels, trail up the stop loss, guys. Trail up the stop loss. You can take about 10% off the top right around this level and trail up the stop loss a little bit so that you know that you're in profits and that you can walk away a profitable trader. But ultimately, because you only took 10%, the majority of your trade or your setup is still all in, about 90% of it is. And if we finally break out and we start breaking out of the resistance, which you can see above here has a lot of weakness, we can see that Gala can definitely fly to previous price action. And for me, the next area of issue, or where I can see a bit of emotion, is right around this level. And then right away, look at the risk to reward, 5 to 1 ratio, 338% to the upside. And of course, you can turn a small move, a small little punt, all the way into a major swing trade, all the way for another higher high. And if you connect these two tops, I don't see why not. We can kind of like, you know, extend ourselves all the way to these levels eventually, and take some profit over there and call ourselves a very, very profitable trader. Okay, so it's not bad of a scenario. Just understand that a lot of these projects are coming down to you know, bear market bottoms where risk to reward ratios are there, and they're going to be hunting liquidity, and we need to kind of step in and show the market where our convictions are in. All right, so that's Gala. Let's move on. Let's take a look at another one. That's gaming. Let me kind of clean up some of these tabs here because I do have quite a few of them. I do have, let's see what else I got on the list for today. We have Miria. Let's take a look at Miria, another OG that's been around a while. Market cap is $75 million market cap, so it's a small market cap. I'm liking these small market caps. We'll talk about some of them that are a bit larger. We talked about Gala already. But Miria is looking pretty interesting. You know what? Let's go back here. Let's take a look at the Miria chart. Miria retraced, and after a huge rally up throughout the last year, it's been doing pretty good. Miria. No, this is the way you spell it. Sorry, guys. Autocorrect at its best. Good stuff. All right. And you can see the dip, guys, that dip, that retracement. And this is what I'm trying to tell you. Like, when you start looking at, you know, support zones, and you start looking at support where there's not really any horizontal strength, there was a bit of weakness that got filled up all into this level. All this consolidation filled up the weak zone. This was empty before. Prior to the price action, this thing was empty. It was concave. Now it's no longer concave. So I really have no choice but to update this. This is where this is good. So let's kind of clean this up. This is no longer a weak spot. In fact, it's just a regular level. It's just a regular grind. As you can see, look at all these little peaks and valleys. We got a bit of a weak spot right into here, which we can kind of deal with. Let's put a small box right into here. I could have reused the other one, but no big deal. Small box right into here. A bit of a weak spot, but nothing major. And then all of a sudden what we're doing is coming down to hunt liquidity at much more lower levels, and you can see that ultimately these levels are where it's at. Okay, so what we got to worry about is that ultimately we're still falling here with no real structural support, none whatsoever. Now, we haven't been looking at the momentum and the trend, but you can see that the momentum, it got oversold, and it's been oversold for a good little while. You know, making lower lows on the price action, the expansion is still full force, but as we get into, you know, oversold conditions, I want to see bullish divergence, guys. Until we get bullish divergence, I'm not really confident in the fact that we, you know, are done here. Like, maybe we push down for a further dip, or we come down a little bit more, and then we can, you know, definitely find those horizontals. Now, if we look at the overall the trend, the EMA to the upside, green histogram bars to the upside, looking pretty good here. Nonetheless, looking pretty good, right? Not bad. Looks like the trend reversal. Maybe we get into the bullish control zone, which is the top half of the oscillator, which would make me super bullish, of course. But look at this, guys. It looks like it's bottomed out. The question is, after these three drives to the downside, are we done pushing down? Are the bears exhausted? Are we going to get some bullish responses? And again, guys, I am not willing to take risk until I see structural support, because as of now, there's no real major divergence, and the only level that we have right now for a Miria to hold support is now based on this cluster right here, and maybe down here based on the volume gap and all this area down here. But until we go sideways for a bit and give us an inverse head and shoulders or a cup and handle, guys, I'm not deploying any more capital here on Miria. I bought a little bit of a dip right into here, and I'm happy with that. If we see a full recovery back to previous price action, any one of these entries will be great, especially this one. Of course, a nice recovery back to previous highs. I'm expecting it to happen, particularly as we see the gaming narrative wake up. It's been taking a bit of a break. It's been taking a bit of a hit, but so has been the entire market in general. All right, so let's move on. Right now, Miria, I think it's a good opportunity, and there are many others. Let's take a look at Vulcan Forge. PYR is the ticker. I got two charts here. No, that's PYI, so we're good. Let's take a look at PYR. And we have a dip of course. Oh no, where are we? No, this is not it. This is it. A dip, of course. Lots of dips throughout the market. Look at this retracement, guys. Massive retracement. TPs hit another higher high, no problem there. Went up for another high. Huge rejection after maybe 3 drives of bearish divergence. We'll take a look at the momentum and in the trend, but it came back to bear market bottoms, guys. Bear market bottoms to hunt the liquidity into these individuals. How many of these people are going to be sellers? How many of these people have weak hands? Already about 50% of them sold off. because these guys were weak, right? They were able, they have those paper hands that sold, and then the question is, how many more do we have below? And if we start coming down to range lows right here at the bottom, risk to reward ratio starts to kick in, and we have to keep an eye on the fact that invalidation, let me get rid of this white one. Let's get rid of this. Invalidation is breaking below this line right here. So let's make it a bit thick to highlight its importance. And then we can say, look, ultimately, we're very close to invalidation. If we break below that level, we want out. We don't want to hold this down because you never know how much lower we could go. Ultimately, the point of control is being tested, and it looks like it is losing that battle. And of course, an entry anywhere around these as close as possible to invalidation is healthy. And back to those setups, if we get in right now and you put the stop loss right underneath the horizontal line, and you basically see this thing pop even right here. Let's be modest. It's still a 4-to-1 ratio. Healthy. You can double your money very easily, up 125%. You can take your initial investment off the table there, take half on the double, and you're good, right? No problems there. However, guys, if we break below, stop yourself out, because you don't know how much lower we're going to go. There's no price action looking left to suggest support here. Although the market is bullish, I do see a lot of people buzzing about Vulcan Forge PYR. However, where's the price action at? We need some price action. We need some support here. We need a higher low. That would be awesome to see a higher low, because we made some major higher highs. What we need is a higher low, and then we go for another higher high. So if you with that conviction is enough to say, look, risk to reward is good. DCing right now is fine. You're basically down to about an 886 retracement from the bottom. If you take Fibonacci theory, swing low to swing high, and you start measuring it all the way down here, it's an 886 retracement, guys. So it's a deep retracement. It's good. It's healthy, and you're very close to invalidation, which means that you can mitigate that risk in those losses. So it's not bad. If you're fundamentally bullish, you're in a good spot here for PYR. And PYR, I forgot the market cap. Let's take a look. What is PYR for its market cap? It should be small. PYR, we're talking about an $80 million market cap. So it's small, guys. It's small. Imagine if this thing goes to a $500 million market cap, which is still small, right? It's considered on the small side. You can make some great gains there just by being modest, and then of course letting it run. When the market wants to take it to much higher levels, we'll trail up that stop loss and let it run all the way up. But at the current moment, guys, we're seeing that a lot of these projects are struggling, never mind trying, but they're struggling to find their bottoms in order to, get some support and get some confidence back into the market. Because as we bleed out, the FUD is there, the uncertainty, the doubt, and obviously the weak hands don't make it any better, right? Why did you buy into the first place? You should have convictions, and you should be holding. And I know it's easier said than done, but the reality is that's the fact. That means your position size was too large, and that's why you're capitulating. It's because you took too much risk. DCA, guys, DCA is a great strategy. Now, there is a project that also bled out that I feel like has some great fundamentals still, right? It has, it's called Neoxa. And if you kind of look at its market cap, it's a very tiny, this is considered a micro cap, right? $7 million market cap. And it has been doing really well in the last 24 hours. This is not why I'm covering it, but I'm just saying the volatility is real on these micro caps. It's up 13%. Okay, so let's kind of look at the chart and see what's going on. But in the last little while, I know for a fact that it's been coming down. And based on that, of course, there's always a FUD. There's always people coming out of the woodworks questioning what is happening with the project and so on. And we can see that basically it has been coming down and made a lower low. It's coming down pretty hard. Now the question is this: as we identified structure, we saw, like, and it respected the TA, guys. The bearish divergence, follow through, back test. This was the low. These were the areas that we could have traded for a nice range trade, even for a nice rally up. But then again, if you didn't take profits, this is the issue. If you didn't put a stop loss underneath the structure, this is where the issue is. Then we formed another structure, kind of going side with a nice point of control at previous lows. A lot of people got in. A lot of people are still holding those red bags. There's a lot of emotional individuals at this level. So we got to understand this. Number one, did we finish this dip? And it does look like it could be done. Why? Because it does look like a corrective move, a big picture corrective move. And if we look at it, right, it came all the way from here, came straight down, to about this level, then it went straight up as a nice retracement, and it came down for another dip. Now it made that lower low, which is unfortunate because it does look bearish, but at least it got it done and over with, right? We know that from a retracement perspective, even if we went from here swing low to swing high, we are down to the 1.618 golden pocket extension level, and in fact we actually fell right below it, a little bit lower than expected. So it's a deep retracement, no doubt. Now if we take this, let me do it again, let's refresh and try it again. If we take it from this low all the way to the high and we start looking where we're at, like we could come down and even further, but it's not even possible because we'll be in the negative. So let's forget that here for a second. What I want to say basically is the retracement is real, and I am not willing to take more risk. If you took risk right here, guys, ultimately a recovery will treat you well. You don't want to keep on buying. You don't want to keep on DCAing and keep on trying to catch that falling knife. But I can say that the probability of it falling further starts to diminish as we get into the extreme levels, especially at these levels where we're hitting extension levels. Okay, so this is what we got to understand is right now the risk is at its peak. And unless we get some sort of structural change here, where we see an indication that the bulls are going to get back in, there's no real reason to take more risk other than if you took any right here. Now, if you're on the sidelines and you appreciate what Neox is offering as far as fundamentals, guys, I do have a deep dive for a lot of these projects that I'm covering here tonight, so feel free to check out the deep dive playlist on the YouTube channel because I do got a lot going on there. But ultimately you can see that this thing right now, if you're on the sidelines, it's at a good level to just deploy a bit of capital, just 10%. Right, just 10%. So let's say you wanted to get in with $100 total, just put $10 in, and that way you can, get your feet wet. You can start, evoking some of those emotions. If it falls, might want to buy a little bit more. But really, this is where things are getting important. You got to wait for the structure, guys. You can't keep on deploying 10% at a time. Eventually, you will run out. What you really want to do is wait for some sort of structure, inverse head and shoulders, cup and handles, Adam and Eves, W formations, bullish divergences, whatever you get over here to give you some confidence that you're ready, that it's ready to hold support. Because as of now, it's making lower lows and lower highs and bleeding and dipping. Even though we got a nice little relief here, that means nothing because we did not change character yet, right? So at the end of the day, let's look at some of this momentum. We can see that we came oversold, and we were oversold before. We came down for a more extreme oversold. The bulls got a bit of a bullish response. This is why today we're doing pretty good. It's up 13% as we speak. But I would like to see the bearish response. I want to see what happens when the bears push this orange line right back to oversold conditions. The question is, do we make another lower low? So if we make a lower low after all of this, that means the bears are still in control, guys. So I'm happy to not deploy. However, on a bearish response, the orange coming down to oversold, and we do not make a lower low, maybe we make a double bottom, I'm getting the inclination that we could be making a nice little floor price where I could put a stop loss like this, right? Sideways price action. I could put a stop loss right underneath these bottoms, and if it breaks below, stop yourself out. All good, right? You took a small loss. But then eventually, if you keep on doing that, you'll catch a bottom. You'll catch a huge rally, and you'll make up for all those little losses, and you'll make some good gains. And you can see that right now the EMAs are facing up with green Instagram bars here on the trend on the daily, looking pretty bullish. Looks okay. It has happened in the past, as you can see, where we got a little bit bullish and nothing really happened. So keep in mind that it could happen again. But again, we've been in the bearish control zone for such a good while that I'm seeing a bit of a trend also, that the trend is slowly trending into the bullish side of things, and little by little we're climbing up. I feel like we're looking to get into the bullish control zone, which is the top half of the oscillator, in the next little while. So keep an eye on it. I think this is watch list material, but I also feel like this is one of the riskier charts right now, given the fact that it is literally in the abyss trying to find the bottom without any inclination or any previous price action to give it some sort of support or anything like that. All right, so that's that with Neoxa. But I like the fundamentals, guys. They're trying to allow the integration of Web 2 gaming into Web 3 by allowing individuals to earn while playing traditional games that are not blockchain games, like GTA, and many others. Guys, this is an interesting concept because really we want to bridge over Web 2 gaming into Web 3 would mean that Neoxa could bring in a massive ecosystem very easily or much easier without a studio. They just get existing games, perhaps get the negotiate licensing or whatever the case is, and then integrate blockchain technology right onto them. I think that's pretty interesting to me, obviously. All right, let's move on. Let's take a look at another. Let's see what else we got here. Let's take a look at, that was Neoxa. Let's take a look at G-Swift. Guys, G-Swift is another bleeder. G-Swift has been coming down pretty badly, and to be honest, I don't even know why. You know, I'm not even too familiar, right? The market cap is currently at a $7 million market cap. So another baby, another very small project, obviously tons of volatility. That's one thing that a lot of people don't understand, is that they see it dipping down and bleeding out, but they don't understand that when the bulls come back into play, because of its volatility, because of its market cap, it could definitely recover a lot faster or even a lot stronger, a lot higher, and with equal proportion, with equal amount of proportion than the bears did. The bulls can come in and equally recover as fast. So we got to understand that market cap plays a big deal into its volatility, and of course volatility brings in, you know, the strength in those dips and those rallies. And I'm waiting for the rally, I'm waiting for the recovery to see what kind of strength the bulls have to bring it back to the previous highs. Not bad of a scenario. Overall, it is a Arbitrum Ethereum based project. Okay, not too bad, of course. And I think I did the deep dive obviously on this project as well, and I felt fundamentally bullish. I felt very good. It's a one-stop shop for gaming as far as an entire ecosystem itself. It integrates AI, integrates many cool aspects of the crypto and blockchain technology, and I felt it was great. But why is it selling off? This is the question. A lot of the times it's because VCs are in and they take profit, the team is taking profit, this and that. So we got to do some research as to figure out what exactly is triggering the sell-off. But ultimately the charts don't really lie. So let's take a look at G-Swift. Let's take a look at G-Swift. Lots of good gaming projects. Again, look at G-Swift. Bottoms. It came down for a massive move down, unfortunately, bleeding out very slowly. And honestly, I would not be taking risk here. Right, the last level to take risk for me was down here, and that was it. No more. I'm not taking point of control, and I'm curious about where the extension levels hit so that we can be real about emotions. And of course Fibonacci does explain a lot about emotions, because the natural behavior of a human is dictated, especially behavior, by emotion. So here we are coming down to the 1.618 extension, and that's an emotional place for a lot of traders when we get to these levels. And you can see that we felt a little bit lower. Now what I want to see is structure, or else I'm not getting in. I'm not buying anymore, right? Even if we get a nice V recovery, that's fine. My entry down here was fine, right? I'm not buying anymore. I want structure. Why? Because the next time I deploy, I want to know where to invalidate and to get out. Whereas as of this, I was like, okay, we came down to 1.27, I'll get in with 10%. We came down to the 1.618, I'll get in with another 10%. But down here, I want to deploy heavier, and I want to stop loss to mitigate that risk. As of now, as the price is coming down, we are getting some signs of divergence, which I appreciate, because we invalidate the expansion. We invalidated the divergence on the expansion because the expansion came down for a lower low, so that was totally invalidated, unfortunately. But you can see that the momentum is doing okay still. It's not like we came down for a lower low on the momentum. We're still holding up. At least we're going sideways or double bottoming. Let's make this a bit bigger here for a second and expand this out so we can make some sense out of it. And you can see that the purple line is pretty much at this state kind of making slightly higher lows, slightly. Okay, so we're still okay here, and it's still diverging. You know, whether or not it's a huge divergence or not, it's still class A bullish divergence at this current moment. And we see that the volatility is oversold, so we're waiting for a bullish response here at any moment to see if we actually start breaking out. We want to see the bulls finally start breaking some of the previous levels of resistance and getting back to previous price action. At this current moment, the trend is still kind of bearish. No real decision making happening. EMA's open, facing down, red histogram bars, you know, slight bullish divergence, but nothing major. This is what I'm saying here, guys. Do not buy anymore until you see structure. Obviously, I'll do my best to make those updates when I do see a great structure that's worth taking. you know, a risk, a trade that is worth taking, I'll definitely give you guys those updates. So stay tuned. Make sure that you subscribe, click the bell, get all those notifications going, just in case you don't want to miss out on my updated videos and my live streams at 7:30 Eastern. All right, guys, let's move on. That's Game Swift. It's one of those, you know, unfortunate events. It happens. You can't get all the best price action. Sometimes you just gotta endure and see what happens. Do you think that Game Swift will make it back to its previous price action on the next bull rally? I think so. I think it's very, very possible. Gaming has been sleeping. Let's move on. Let's take a look at another one. That's Game Swift. What else do we have here? Altura. Altura has been a bit quiet. A lot of people talking about it before, and all of a sudden now no one's really looking at it, which means that maybe we should. Altura. Let's see what's going on here with Altura. We're talking about a $20 million market cap, another small micro cap, small potential, BNB blockchain, not bad there. And let's take a look at the price action. Altura. All right, what's going on here with Altura? Another one that's dipping, but we're getting there. We're getting there because you can see that below this, there's tons of weakness. There's tons, to the point that I feel like just bringing this up a sec. Just bringing this up. Let's just be real about that. You can see that there's tons of weakness below. If we do not hold this horizontal support at this current moment, guys, it's very likely that we start falling. I understand individuals that want to put stop losses here. I would definitely consider, you know, being defensive on my portfolio, on my positions around this level. I'm gonna make this thicker to highlight its importance. And the last time I did that, I did this level because at this level we were coming down for a double bottom, and it was looking like we were holding these previous highs of support. We got a bit of a bounce, and then we came down, and then we started rejecting, and then we came down. We used the previous support levels as a resistance, guys. We've totally flipped, and that was very bearish. So unfortunately, we came back to the bottom of the range, basically now using this top, these bottoms, this bottom, this bottom, and currently now using all that price action, that horizontal price action, for support. Now, do we actually use it as support? If we do not, we're falling through. It's very likely that we come through the volume gap and we start looking at the previous bottom as the final last line in this line in the sand. Because really, if it breaks below here, guys, we're coming down and we don't know how much lower we're going to go. So just get out. It's best to get out and just say, let the price come to me, let the structures come to me, because if we get support here, great, awesome. You know, we'll deploy and we'll put some bids right into there, put a stop loss underneath if you feel, and that's great. If we fall through the volume gap, the next level to accumulate is here based on risk to reward, and then be done with it. Do not buy any more. Put a stop loss right underneath here, and if it falls, it falls. So for example, maybe we come up, dead cat bounce, come back down, fall through the volume gap, bounce around here, and that's all you're gonna do. Get in right here, expect a reversal. If it doesn't get a reversal, get out, and it keeps on coming down, get out, because who knows how low it's gonna go. And but as this happens, the risk to reward ratio improves, and the entries improve, and the reward ultimately improves. So let's look at the setup. For example, let's use a setup. Let's say we get in right now, and hypothetically speaking, we put our stop loss for now. Let's put it at range lows, right? Absolute the bottoms, right? So that we can just look at the big picture for a second. Let's get rid of these oscillators, because we can see that the oscillators aren't doing too bad. Just to quickly look at these before we put them away. We're oversold in every single way here. Yeah, oversold. Bulls are, yeah, everything's completely oversold with no sign of bullish divergence. But the trend is looking okay. EMA crossed to the upside. One little green histogram bar so far there. Let's see if it kind of, you know, continues to that. We got lots of drives of bullish divergence with no major invalidations, because every single expansion to the downside has been lower than the previous. Look at this one, look at this one, look at this one, and then look at this one. So it's doing pretty good, not too bad. But back to the price action, guys, really what we need to see is this thing hold support right into here. Okay, and as you can see, if we put a stop loss there, our actual loss is a 78% loss. Okay, it's massive. I get it. You know, that gap right there, although it looks small, it's pretty big. The reason why it's big is because this is a micro cap, guys. It's a very small project. So which means that the volatility is there. So if we do come down and we come down 78% to this level, when we get a bounce to the upside, it could do another 78%. Now, if it's a large cap project, this little gap would represent maybe, let's say, 5%. But that means you're only getting a 5% bounce or a 5% range. So the micro cap, the smaller the market cap, the more volatility you get and the more risk you take, of course. But if your risk to reward ratio is healthy, you can mitigate all kinds of those losses, right? All that risk. So stop loss underneath here. Now we're talking about 13%. However, what about if you get stopped out? So just understand that wiggle room is good as far as stop losses. Now, of course, position size matters. Okay, in this case, be prepared to take maybe a 20% dip, 20% loss, and that loss should only represent 2% of your trading portfolio. Now all of a sudden we go for that higher high. Let's say we go for a higher high. This is a great exit, 390% to the upside. Let's say we want to be more modest, right into here, right here, we want to get out. That's 176%. Risk to reward ratio is 11-to-1. Healthy, no problem, right? Even if we came down literally to where we were before, down here, it's still a decent ratio. A lot of traders trade at 2-to-1. It's 2.3-to-1. It's still not bad, right? What about if we break through the volume gap? You can DCA at slightly lower levels and bring your average entry down here, 6-to-1, still making 390%. Guys, there's a lot of options here because we're at the bottom of the range. We're not buying tops. We're not going to be buying in to a market where we become exit liquidity because we've retraced already significantly from the absolute bottom, right? So let's do a Fibonacci just to give us an idea of the strength of this retracement. Swing low to swing high. We're now touching the 786 retracement, guys. So 786, and we're getting support off of it 3 times on the 786. Do we come down to the 886? Possible, maybe, but that's a DCA opportunity, or stop yourself out and reaccumulate opportunity. You get my point. I just feel like ultimately, if you're bullish on Altura, if you're bullish on a lot of these gaming altcoins that are retracing back to critical levels, it's not a bad idea to start deploying a bit of capital. Now, if we push this aside a second and we get rid of some of these Fibonacci's and we start looking at, well, theoretically, why don't we get in with 50% of our bag now, and then 50% of our bag right here, and then put the stop loss in right underneath? That's viable. That's DCA, guys. You can even do like a little bit less here, maybe 30% and then 60%, 70% down here, or 40% here and then 60% down here. It all depends on how you feel you want to get access to that risk. Right? It's all about the risk. Getting in all at once right now, there's risk. Unless you put the stop loss right underneath this thick yellow line. You get my point? So it's not bad. Momentum is looking okay because it's severely oversold. The trend is looking good because it's got an EMA cross with a green histogram bar. We're at horizontal support levels that should hold up, but if they don't, we have a plan. We're ready for that dip. We know what we need to do. So there's no ambiguity. There's no uncertainty. The plan is ready. It's easy. And when things are easy, it allows us to create setups that we can play with. So this is not bad of a scenario. I like Altura. I think it's a great buy opportunity regardless for deploying a bit of capital. Let's move on. Let's take a look at the next one. What else do we, that was Altura. The next one that I have on my list here is let's take a look at Ronin. It's a gaming blockchain. It's a project that I've rarely cover. I don't even know if I have an actual chart, but the ticker is RON. And it is a $678 million market cap, trading volume, okay, $11 million worth of trading volume. And it has been kind of, you know, retracing and dipping down in the last little while. So let's take a look at this in a little bit more detail here on Ronin. See if I have a chart on RON. Okay, not bad. I do have a chart. Let's see what's going on. Wish I had it on a watch list. I should have it on my green watch list. Maybe I'm interested. Let's see. Let's put it on my green watch list. But for now, look at that. Look at that. Okay, so you can't negate the fact that the TA worked here. And I don't know when I did this because I've done it. I cover charts on a daily basis, both on the live stream and obviously the pre-records and all of that. I'm all in on crypto all day long, 6 days a week, 7 days a week, guys. I'm at it. So I've done this chart before and I shared it with you guys some way, shape, or form. And you can see that sometimes the TA, most of the times, the TA does play out pretty accurately. And the fact is that this this head and shoulders broke the neckline. And that's when you get bearish, right? Because when you break the neckline, you basically are breaking horizontal support levels. If you stay above it, you're using the support levels as what they're intended for, and that is for support. Well, it's no longer support, to the point that we didn't even back test it for, confirmation. We just kept on falling right through this volume gap, and we fell to about $2, which is the next level that I would be interested in. But however, instead of trying to catch the falling knife, guys, it would be nice to see a bit of structure. It would be nice. Now, the structure could include that back test, get a bounce right here, come back up to the previous high, or the previous breakout zone, and come back down, and maybe come down for that lower low, and that would be a dead cat bounce, and come down to this level, another volume gap, another level, another zone of which I would be interested in accumulating. So you have choices here, guys. You can buy here. If it rallies up, great, you got an entry, you got some exposure. If it gets rejected and comes down here, you got to double down. That's another opportunity. So get down with a little bit more, right? And then maybe it goes up again, rejection, and comes back down, and it goes through the volume gap. Okay, fine. Then you have to do the same thing. So you have opportunities to DCA 30%, 30%, 40%. Not bad of a scenario, because at each level you are DCing in and dragging your average cost down, and you're building a fat position. And if you start zooming out, really what you're hoping for is that eventually what happens is that we reclaim previous price action. And if your average entry, let's say, is right in the smack in the middle, right into here at about $1.69, once we get back to $4.50, you'll be in some gains. The question is, which horizontal level is going to be respected? We got this level and this level. Volume gaps are very clear, as you can see. Lots of empty space right into here, showing a lot of weakness in this chart. So we got to understand that that weakness presents opportunity, but also bearish opportunities, right, for shorting or TPing or whatever the case may be. We also have this top that could act as some support, or even psychological support, or if this top has no volume, maybe right onto this base right into here at the breakout right here into this level at about $1.10. So I feel like I need to put a few arrows into here to make some of this strategy true and valid. This is not a bad zone, especially if we get some structure. I want to get into the momentum here for a second. Once I do this, here's not bad, obviously a top of the volume gap, and obviously the bottom of the volume gap. After that, we start hunting liquidity, guys. We start hunting liquidity into all these individuals, all this market participation that accumulated for this rally up, and it could be possible that that happens. But we got to see what kind of bullishness the market gives us. If we're going to be led by the Bitcoin and Ethereum bulls to higher levels, we'll see a lot of these altcoins run up with it. Let's take a look at the momentum and the trend. For example, the momentum right now is definitely oversold. You can see that it got into oversold conditions. No signs of bullish divergence at the current moment. Maybe on the lower price, on the lower time frames, or you can see that we're making a bit of divergence, class B bullish divergence perhaps. Let's see, double bottom on the price action and higher lows on the momentum, class B bullish divergence. But I wouldn't say that it's totally valid at this point. I want to see a structure, guys. I don't want to be taking chances here. I would like to see some W's, but we are oversold. We are oversold, and we got oversold before, and then we got relief, and we're oversold again. And the problem is that the volatility is overbought, and the volatility goes up and down fast and quick and often. So let's wait to see what kind of response the bears have. Let this thing roll over, let the orange line roll over and get down to oversold conditions again, and then we'll see exactly how much strength the bears have in them. And if they continue making lower lows, guys, don't try to catch the falling knife. Wait for a structure that shows us that we're holding a horizontal line very, very strongly. We can put a stop loss underneath, or a structure that suggests pivot, like an inverse head and shoulders or a cup and handle, Adam and Eve, with bullish divergence. We're still early here, guys. So I like the idea. I like Ronin. I like the blockchain, dedication to the blockchain. It's very tied with Axie Infinity, which is an OG in the space. But I cannot with any confidence, because of the confluence, suggest that we are done dipping. Now, if you look at the trend, maybe we get that EMA cross soon, maybe we don't. Maybe we open up and get that fake out happening and see it expand to the downside. Until I get an EMA cross with a green histogram bar, guys, I remain in a slightly bearish stance, and I remain looking for a structure to put that stop loss in, so I can validate myself sooner than later if it decides to keep on coming down. All right, so ultimately, Ronin, not looking the greatest. I think we need to have a bit of patience here. And you're not buying the top. That's for that. Okay, that's reality. You're not buying the top. You're buying a little bit of a retracement, a decent retracement. It does look like perhaps a 0.5 Fibonacci from its bottom, which means that it's not bad. Let's see if how accurate I am. 0.5 maybe is right around here. Golden pocket, not bad. 0.5 golden pocket, so not bad. Golden pocket, statistically speaking, has a high probability of a reversal. And let's see what happens. That's why deploying bit by bit between the golden pocket and the 886 is usually a great strategy, something that I do myself. And then after the 886, usually we get into levels of which are like last line in the sand scenarios that you definitely don't want to take more risk and start deploying more and more and sinking more capital into a asset that's falling, right? So you got to be strategic about that. And then we have other projects like utility tokens and so on, like Prime. A lot of people talk about Prime lately. Prime, let's see what Prime is about. Let's see. Prime, nice dip. I wouldn't get bullish until we form structure and or we come down to about $7.15 to see that support again. And then we could fall through the volume gap also and get down to about 40 because we have weakness there. What I do like is these EMAs and green histogram bars right now pushing to the upside, which is really nice. I like that. I appreciate that. And we see the volatility definitely overbought while the momentum, and let me zoom in here for a second, the momentum's oversold, giving us a bit of divergence. Lower lows on the price action, higher lows on the momentum, suggesting class A bullish divergence. So I want to see what the bears, again, I'm saying this across the market, I'm saying this across all projects, all narratives, is that a lot of these projects are seeing volatility overbought. I want to see it oversold. I want to see what kind of response the bears give us in the next little while, because if it's a lower low and the bullish divergence gets invalidated, guys, unfortunately we have to remain bearish here until we get that structure that suggests a pivot. Okay, so we're still early, but it's at a good place to give it a bit of attention because we are hitting horizontal supports that are critical. Let's again look at the price action. Nice A, B, C correction to the downside, really nice, and then volume gap. Right, usually these are emotional levels, places of which bears and bulls want to come in and play the game, and a lot of times it gets respected and the bulls hold it up above, in this case would be above $7, or if there's not enough bull support, we fall through, we come down to about $4.35, and then we kind of hope for the last line in the sand, the last few nodes of volume down here that should hold up the price. And if it doesn't, guys, done, get out. You have your positions, and hopefully we get that bottom, we form a structure, and then we get that recovery later on. Just note that you did not buy the top. You're not exit liquidity here at all. Okay, so that's not bad. Let's move on. We got Prime and Shrapnel. Let's take a look at Shrapnel. Shrapnel is another one that a lot of people are kind of, buzzing about, something that maybe we want to put on our watch list. And Shrapnel, if I'm not mistaken, is another small cap, another small project. Let's see. Whoa. Let me type that in here so we can Shrap. Let's see. We're talking about Shrapnel's market cap at a $40 million market cap. It's tiny, small, lots of good opportunity there. Now, if we look at the price action, let's see. Did I do this already? I think I did, but all good. Let's take a look at Shrapnel. Deep retracement, huge retracement, ABC corrective retracement. Huge down, low market cap, lots of volatility, lots of opportunity, and back to the last line in the sands for Shrapnel. So I did buy a little bit right into this dip. Okay, that was my entry right here. And I'm still interested. To deploy a little bit more, and I would be happy to get in because look at the volume right now. The volume is actually increasing as the price action is grinding up, which means that there are individuals that are accumulating here for potential reversal. And look at the volume, look at the point of control, a lot happening here. I want to get onto the 4 hour here for a second. You can see upward sloping and right into here. As we started moving to the upside, we're getting a bit of volume and it tapering off. So I want to see structure, and it does look like this is a great place for it to happen because risk to reward is actually good. The last few dips and price action we have here looking left is right into this level, and after that we have to get on chain or something like that to see where it came from. But ultimately lots of volume, lots of profit taking at the tops, and then right back into here, maybe reaccumulation by the same individuals that took profit at the top that bought here will be probably looking to deploy or redeploy right back into this level. So not bad of a zone. If you look at the momentum double bottom here while the price action is coming down, that's class C bullish divergence, which is a very healthy. It's not bad, it's not the strong, it's not class A or B, but it's still healthy, it's still looking good. Class B bullish divergence, class C bullish divergences where the momentum is going sideways and the price action keeps on coming down. It's not bad. Okay, the expansion is definitely looking like it's bottomed out here, the red expansion, but the volatility, like I've been saying throughout the video, basically we've gotten overbought and it's likely to get down oversold again. Okay, so let's see what happens when it gets oversold so we can see that the bears are done. We don't want to be taking chances on those bears, and the EMAs are facing up with green histogram bars, guys. That's bullish, really nice at the bottom of the range here, but we're still making lower lows and lower highs. So guys, it would be nice to get some confirmations in the price action at this current moment to give us an indication of a pivot, because we're seeing momentum looking okay. We're seeing the actual trend oscillator looking actually better than expected, and then all of a sudden we look at the price action, we're making lower lows and lower highs consistently. Okay, so this is a bit of an issue, and this right here is such a small amount of price action to make a call on. What I would like to see is a run up, a rejection right here, a back test, a higher low, and back to this level. What would this look like is basically confirmation low, a higher low. This would be confirmed as the absolute low. This would be classified as the right shoulder. This would be classified as the right shoulder, which would be that higher low. This would be a great buy opportunity to confirm this support, acting as support, basically acting as support. It would be awesome for us to actually buy a little bit more upon this break of this previous high. Why? Is because then if we break it, we confirm a higher high. We confirm a higher high that way, right? So then we can get another impulsive move up. We don't know how high we go, and then if we back test it, we get in again. You get my point. And then all of a sudden we start looking at this and it looks like a pivot. It looks like a nice rounded bottom where we're starting to reverse to the upside. Now, of course, this looks so textbook. It looks so beautiful and perfect. And it sometimes it happens, sometimes it doesn't. Sometimes there's a slight variant of it. Like, you know, maybe we get a nice huge rally up and then a retracement that back tests different levels and so on. But of course, all we want to do here on this channel is stay one step ahead of the market, because this is the only way we can plan for future price action, is just staying one step ahead, guys. If I've offered you any value in this video, do the channel a massive favor, slap the like button. It does really help out with the algorithm. And of course, if you want to join the Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. Take care, guys. Have a good one, and don't forget, buy the dip.